Hello beautiful beings, welcome to this video where we talk about the essentials of an emergency fund. In the previous video we have spoken about setting up your budget and the different budgeting methods that you can use for your personal finances. And as part of your budget or as part of your savings goals, you need to have an emergency fund in place. So we are now looking at what do you need to consider for your emergency fund in this video. Many of us do not have a rich aunt or a rich uncle who can come to our financial rescue whenever we are in trouble. And as a result, we have to be the adults that we are and make sure that we have emergency funds in place so that when we are in financial situations or in financial trouble, our emergency funds can act as that rich aunt or that rich uncle who is always there on your side to rescue you from financial situations. So why is having an emergency fund important? Having an emergency fund is important because number one, it covers our unexpected expenses. You know, those things that just hit you out of nowhere. When you have an emergency fund, it allows you to cover those expenses that you have not planned for. And it prevents you from having to either go for an overdraft or having to take out a loan or having to call a friend to come and rescue you. An emergency fund also gives us a peace of mind. You sleep well at night knowing that you have a fund dedicated to your emergencies, and in a time of need that fund is there to rescue you. So you do not feel stressed. You walk or you go through life with confidence, knowing very well that if you do have an emergency, you are covered. So you do not have stress and anxiety when you are thinking of any financial trouble that might come your way. Having an emergency fund also allows us to avoid debt because you have already planned in advance and you have put funds aside for emergencies. When an emergency hits, you basically just transfer the funds or put in a notice with your bank to transfer the funds, and just like that you have solved your problem. So there is no need for you to go to a loan shark. There is no need for you to use an overdraft. There is no need for you to take out a personal loan or to borrow from friends and family or colleagues. You are sorted because you have your emergency fund that you have already put aside in anticipation for any emergencies. An emergency fund also covers you from job loss or from income reduction. If today your income reduces, they tell you at your workplace that your income is reducing by a certain percent. If you have an emergency fund, your emergency fund can bridge that gap between your salary as you know it and the difference that is being reduced with. So for a couple of months, depending on how much you have put aside, you will be covered and you will not experience difficulty. And also if you have lost your job, and let's say for instance you have an emergency fund of up to 6 months of your expenses, then you know that for 6 months you are safe. At least your expenses are covered for that period of time. If you have more than 6 months put aside, even better. You are able to be a bit more resilient while you are looking for another job or while your income is being increased again or going up again. Your emergency fund will cover you in the meantime. An emergency fund also prevents lifestyle disruption. When things happen and you do not have an emergency fund, you are not able to maintain your lifestyle as you know it. But when you do have an emergency fund in place, your lifestyle is not disrupted. You don't stop your weekly massage on Friday afternoons because there was an emergency, because your emergency is already covered. So it does not take away the little luxuries that you have for yourself in your life, which is a way of how you reward yourself for all the hard work that you do. An emergency fund also helps us to improve our decision making. You know, when you know you have that fund by your side, you are not rushing into making decisions. You sit carefully, you analyze the situation, and you decide because you have that confidence that there is no rush for me to make a decision. You know you have the money and you can think clearly. So the emergency fund gives you time to evaluate your options and make the right decision. Our emergency funds also gives us financial independence. It gives us a sense of financial security because, like I said earlier, you go through life with confidence knowing that if there is an emergency, I have already made a plan and I have the funds for it. So that gives you a sense of security and a sense of independence whereby when an emergency hits, you do not need to rely on your family, on your friends, on your partner to solve that for you because you you have made a plan for it and you are able to solve it on your own. So now that we have looked at the importance of an emergency fund, what are the key essentials that your emergency fund needs to have? Or what do you need to consider when setting up your emergency fund? The first thing you need to look at is to set an amount to save. Decide exactly how much or what size of an emergency fund are you looking at. Are you looking at a 3-month of expenses emergency fund, or is it a 6 months, or is it more than that? Maybe it's a 12 months. Once you have decided that, then you need to decide how much exactly will you be contributing monthly to build up your emergency fund. Are you putting aside 200 every month? Are you putting aside 3,000 every month? Are you putting aside 15,000 every month? Depending on your income and your expenses, then you will be able to determine, or looking at your budget, you'll be able to determine how much are you able to put aside every month in order to build up your emergency fund. You know that once your emergency fund is fully funded, there is no need for you to keep contributing to it. Once it reaches the number of months that you want it to cover, you can stop contributions and those funds can be diverted now to your investments. And there are people who are able to build up their funds faster. Let me say within 2 or 3 months, they already have their 3 months or 6 months emergency fund set aside. However, not everyone is going to be able to do that. So you allocate accordingly, according to what your income and your budget can allow, and you build up until you get there. The second essential of your emergency fund is accessibility of the fund. When it comes to this, you need to keep your emergency fund in an accessible, easily accessible account. Don't lock it into a 32 days account, because then you need to put a notice of that number of days, which you do not always have. So when an emergency hits, it should be very easy for you to access that money so that you can solve the problem and you don't have to wait. The third essential is the purpose of the fund. As an individual, you need to decide what constitutes an emergency for you. Is it medical expenses? Is it a car breakdown or a flat tire? Is it a job loss? Is it an income reduction? Is it unforeseen events like natural disasters? Or is it a family member who is ill or who has a problem? What constitutes as an emergency for you? And you need to document it as part of your financial plan and make sure that you only use your emergency fund if any of those things that you have listed have happened. So don't make it a habit of dipping into your fund for things that are not part of your listed emergencies. For example, you just hear your friends are going to the coast for the holiday and then you tag along and use your emergency fund. No, that is not an emergency. So only stick to the things that you have listed as emergencies, and those are the only things that should make you tap into those funds. The fourth essential is automated contributions. When it comes to our emergency savings or any other types of savings, we need to make sure that our contributions are automated. Make sure that money automatically goes from your transactional account to the account where you are keeping your emergency fund. And there should be no physical involvement from your side. It should be automated. Once the income lands in, then that money goes out. That way, you will not end up having to use your emergency fund money for other expenses or for wants. Essential number 5 is to replenish after spending. Every time you have used your emergency fund, make sure that you start saving again to replace the amount that was spent, so that at any given point, your emergency fund always goes back to the amount that covers the number of months that you want it to cover you for. So do not wait for the next emergency. The next emergency might be you losing your job, and now you are no longer able to be covered for the number of months that you wanted to be covered for because you have used the funds and you have not replenished. Essential number 6 is to review regularly. So on a regular basis, make sure that you are reviewing your emergency fund, especially if there are changes to your lifestyle. If, for example, you move to a new city or a new town, or if you have a child, look at whether your expenses are still the same. And if they are not the same, it means you need to make sure that your emergency fund is matching up to those expenses. Then you have to increase contributions or you have to make additional contributions so that you can top up the difference. So where can we keep our emergency funds? When deciding where to keep your emergency fund, you look at three key things. You look at accessibility, which I mentioned earlier, and you also look at liquidity and interest growth. Any account that allows you to have those three, where it's liquid enough for you to take out the money, you are able to have quick access to the funds, and you are able to get interest on the money, then that is the type of account that you should be looking at, regardless of who the provider is and all of that. So some of the options that one can consider is a high yield savings account. And with a high yield savings account, you have quick access or ease of access to your funds, and you are not penalized on accessing those funds. At the same time, you are also earning higher rates of interest, and your money is able to grow. And remember, we mentioned compound interest in previous videos. The more interest you are earning on top of the previous interest, the more you benefit from compounding growth. So your money is growing on top of that interest, on top of interest, on top of interest. The second account to consider is a money market account. And this is good for people who are very disciplined, because for a money market account, you need to maintain a minimum balance. For example, you find that there are funds where you need a minimum balance of 100,000. And without discipline, you will not be able to earn any interest if you are always dipping in below the minimum. So you must always be above the minimum of whatever money market account you have access to. And with money market accounts, you also have a really good interest, and you are able to access your money in a time of need. Online savings account is also a good place to look at for keeping your emergency fund, and this usually offer higher interest compared to the traditional brick and mortar banks, and you are also able to transfer your money out to the different accounts where it needs to go if you have an emergency. At number 4, you can also consider cash or physical currency to keep as your emergency fund. And with this one, there is no need for you to worry about transactions and transactional fees and all of these things, because you are keeping the money cash with you, probably in your home or in your office or wherever you feel is the best place to keep your cash. However, on this money, you will not earn any interest, because it's just sitting there in your house or wherever, and it's not safe to keep large sums of money as cash. If it's for very small emergencies, let me say up to 2,000, you can maybe keep that at home. But something where you are looking at 3 months of your expenses or 6 months of your expenses or even more, then it would be safer to consider putting it into a bank account or an online bank account. So this is best for very small emergencies. It's not advisable for your large emergency fund. So we have looked at the emergency fund, its importance and its essentials, as well as where you can consider keeping your emergency fund. I would like you to share in the comments if you have an emergency fund or not, and if you have one, for how long will your emergency fund cover you at the current moment? Is it for 3 months? Is it for 6 months? Or is it more than that? If you have found value in this video, leave a like and subscribe to the channel so that you can receive more videos like this on personal finances. I will see you in the next video.